Welcome back. So let's talk about the new insurance legislation and what it means for you and, of course, for me. Let's welcome Mr. Johnson Chukwu, is the Managing Director, Carry Asset Management. He joins us virtually from Lagos. Thank you so much for joining us, Mr. Chukwu.
Thank you.
All right, I'm just going to hope that that gets better as the conversation progresses. So, Mr. Chukwu, it's called the Nigeria Insurance Industry Reform Act, NIRA 2025. And according to reports, there are quite a few reforms in this new legislation, which is touted as a game changer to, shore up Nigeria's moves to becoming a $1 trillion economy. Let's look at some of the reforms. It will include stricter enforcement of compulsory insurance. So insurance will henceforth be compulsory. Full digitization of insurance services, raised capital requirements, faster claim settlements, and the creation of policyholder protection funds. So which of these reforms contained in the new act, gives you, optimism that the confidence quotient in insurance for Nigerians will be increased, and henceforth there'll be no more hesitancy to picking up an insurance policy?
Well, Bukola, the truth is that this new act will go a long way. Every aspect of the act is important in improving policyholders' confidence in the insurance industry. If you look at some of the constraining factors limiting the growth of the insurance industry is claims payment, because a lot of people who take on policies have challenges with getting their claims. One among those factors that constrain claims payment is, one, the capitalization of the insurance companies. Of course, this new act has made provision for a more robust capitalization of insurance industries. Then you talk of investor protection, policyholder protection fund. In every business environment, there could be failures. There could be instances where, for one reason or another, a company will fail. So if you have a policyholder protection policy where funds are set aside, just like have the banking industry, where Nigerian Deposit Insurance Corporation is the one that pays depositors when there is a failure of banks, that will further engender confidence. And then you talk of issue of enforcement of claims payments, which means when they delay in claim payment, the National Insurance Commission will step in and ensure that those claims are paid. So if you look at all this, what I may call the major hallmarks of this policy, including the issue of digitization. Of course, we're talking in the digital world, and if you do not adopt digitization, you are certainly not going to grow. So every component of this act will go towards enhancing policyholders' confidence that when they take on insurance policies, the policy and the risk crystallized, that they will be indemnified.
Different angles to this one, and that I want you to further break it down for us. So there's the everyday Nigerian who is still a bit skeptical when it comes to insurance. Maybe it's not even skepticism, it's just outright, I do not want to hear, okay, this little money that I have, let me use it to buy food and, sort my transport. I'll now take another portion of it and pay for a premium. No. So there's that. There are those who have insurance, right? And they've not really gotten benefits from it. So they wonder, well, what's the point anyway? In fact, even the third-party insurance, when anything happens to their vehicle and they try to claim for the vehicle that is affected, that's the third party's vehicle, it's always a hassle. Eventually, they just pay out of pocket, right? So for a lot of people, they don't really see the benefit in it. There's also the companies. In fact, someone said that the insurance sector is almost richer than the banking industry in that sense because of the kind of money that comes in, right? So how are we able to ensure that that trickles down to the economy in that sense? So on those levels, how is this a game changer?
Okay, let's start from the issue of people not willing to take on policies because they are poor or they really don't have disposable income or extra income to take on policies. If you look at that act, there's a provision for enforcement of compulsory insurance. There are some insurance policies that you must take as a matter of compulsion. Take, for instance, vehicle policies, fire policy, workman compensation. There are a couple of those policies that are absolutely necessary for the orderly function of the society. So if they are enforced, well, one of the things you know about change in culture and human attitude is that sometimes you need to force people to change from their ways. So if, for instance, a third-party insurance policy is enforced and rigorously enforced, then every vehicle will have that. Then what follows is that there is a provision for claims payment, for ensuring that stringent enforcement of claims payment. Then means that if you have a third-party insurance cover and you have an accident, remember that you're not the one that will be paid. It is the third party who you damage his or her vehicle that will be paid. And then even if you do not go to your insurance company, the third party will get your insurance cover from you and go to give to his or her insurance company, who will now follow up with your insurance company to make sure they honor that third-party payment. And if the other party's insurance company defaults, there is NICOM that will ensure that this law is enforced. So that's in terms of, one, you have the need to compel behavior in the right direction, which the compulsory policies will drive. Then you need to compel claims payment. These are some of the constraining factors to be taken on policies. If you buy a vehicle, you are certainly going to get a license for it. So if you can get a license, a compulsory insurance policy can be bundled into your license renewal. So that way you are compelled to do that. Just like we are paying value-added tax, that when you make a purchase, then you must pay VAT. If you want to avoid VAT, you must avoid purchase. So that's one it relates to changing the culture and attitude of people towards insurance. But what is most important is that claims are paid and paid on time, and that insurance contracts are simplified in such a way that the layman can understand those terms. What is the challenge we have with insurance claims? That there are a lot of exclusion clauses embedded in insurance policies that an average holder may not bother to look at. Take, for instance, you have a car insurance policy. You are not supposed to give the car to a minor or somebody who is not up to age to drive, but it may not be explicitly known to you. Then you give it to your child who is 17 years and had an accident. You're glad to say, look, I sent my son to go and get some groceries for me, and he had an accident. And they say, how old is he? He says 17 years. Automatically, they will disqualify that policy. But if you knew that there's a clause that excludes any child from driving a vehicle, you would have given the vehicle to your son. So you realize that you are not able to make your claim. So these things, among the things that we should be pushing, is that the insurance policy contracts are simplified in such a way that they are driven by bullet payment, that if you have a one-page document, you can actually read through it and understand the do's and don'ts of a cover. Then as it relates to what's the benefit of insurance company elsewhere in the world, because insurance have reserves and they build those reserves over time, they become big institutions. Like in South Africa, the insurance industry is bigger than the banking industry. The same applies to several countries that have history of long periods of insurance. So if we now begin to build an industry, if this act leads us to begin to build that industry where you have your retained earnings, your reserves, and they build up over time, you realize the insurance company will be a major investor in the financial market like elsewhere, and that will further grow their capacity. The earnings from investment in insurance companies are very huge elsewhere in the world.
And I wonder if there's a provision in this legislation that makes it compulsory for NICOM to, go after insurance companies that fail to pay claims promptly, just as it has now mandated, people to obtain an insurance policy compulsorily. This is because I've heard some Nigerians cursing over the phone, with staff of insurance companies over how much exactly they invested and how much is coming through to them, because that is a very big concern as far as picking up an insurance is concerned, and that's what informs hesitancy. I'd like you to speak to that. And, while you're doing that as well, there is also the concern that insurance companies now have to shore up capitalization. I wonder how that will impact on the economy.
Okay, starting from the first part of your question, insurance requires that for every policy you underwrite, there is a part of that premium is kept in reserve. So you have several reserves that insurance companies are statutorily required to keep. So these reserves, what the NICOM needs to ensure that these reserves are represented by assets that the insurance companies hold. Some of them liquid assets to meet obligations. as they fall due. So if an insurance company failed to make good or to indemnify a person who suffered a loss on a cover, then NICOM can enforce this payment. We've had instances where reports are sent to NICOM, and NICOM will impose some regulatory enforcement on that insurance companies. They are NICOM, because they give life, they also have the power to take life. NICOM has the capacity to dissolve the board of an insurance company. NICOM has the capacity to take out or to remove the executive management of an insurance company. NICOM has the right to ask an insurance company to transfer part of their reserve funds to a dedicated account where disbursement could be made. So the key thing is that for NICOM to exercise these authorities that they have. I can't remember the second part of your question. Maybe just refresh me on that.
We might not be able to deal with that because of time.
Are you there?
Yes, Mr. Chukwu, because of time, we might not be able to take that on, but clearly it's an ongoing conversation. In fact, I just thought of the whole back and forth between some of the investors and government, if insurance would have also sorted that. But we have to anchor at this point.
Yeah.
Say that again?
Okay, I remember you were talking of the capitalization, how that will affect the economy.
Yeah, but we're totally out of time, Mr. Chukwu. We have to run. Apologies for that, Bukola.
Yes, indeed. Thank you so much, Mr. Johnson Chukwu, is the MD, Cowrie Assets Management Company. Thank you for coming through on this one.